invite my panelists to the stage. We are wrapping up the afternoon sessions with the last but not least panel, which is called Tokenized RWAs as an asset class. What still needs to be solved? So first of all, I want to thank everyone who stayed here for the whole of the day until the very last panel. And I'm very excited, first of all, because I can see the shift. You know, it's not the first event I organize, and usually we keep kind of investment panel until the end of the day. So today, this panel is not investment panel. I mean, of course, we have investors at the panel, but we do not keep the VC panel or investment panel as the topic, right? Like, secondly, usually then it's an investment panel, asset class. So is it one general umbrella, or should we classify it as a separate niches and the separate sectors like real estate, commodities, I don't know, private credit? So how do you treat it and how do you classify it yourself?
I start. So just maybe a quick introduction. So my name is Hervé. I'm working for Standard Chartered Venture, and I'm leading the investment on digital assets, for joint venture between Standard Chartered and SBI Holdings. VC type of investment. So if you guys have questions, I'm happy to answer later on. In regard of your question, it's a good question, and it depends the perspective you're looking at it, because I think in a crypto space or digital asset space, you can only talk about RWA as an asset class or segment, vertical, but what are actually tokenized, it's different segment or asset classes as we know them in terms of traditional finance. So indeed, you have a real estate, you have all the, if you were here since this morning, you heard about all of those things, ranging from capital market product, funds, many use cases. And then that's where you could see subsection where the startup will focus on as a niche market to start with before just a scaling and a widening, because it's the same technology, and often if you have the license, it's the same license independently of the subsector.
Hello, my name is Adam. I'm at RockawayX. I'm also responsible for market neutral strategies. We have been deploying money into DeFi for more than 6 years now. We deployed more than in hundreds of millions of dollars, so not really a small one. I would say that we are one of the main institutional investors in the DeFi, not only for the liquidity but as well for VC investments. And to the topic, RWAs, it's everything, right? In DeFi you have stocks, you have commodities, you have private credit. You kind of sum it up all on chain, but you need to make difference, right? It's different if you trade stocks, and it's different if you trade private credit, right? Different risk, different return. So definitely there are subcategories. It's just funny because crypto guys call it RWAs, but it's basically many subcategories, right? In TradFi you have specialists for each. In crypto, people pretend it's one category, so it's definitely not. I think blockchain here is just technology which brings the RWAs on chain, makes them more efficient, but it still doesn't change the RWAs itself.
Great. Hello, everyone. My name is Anand. I'm from Ghaf Group. We are a family office, and we are also an advisory arm. Locally born and raised over here. Been in the space for a while, and happy to be here today and see all your tired faces. So because it's the last one of the day. So when it comes to what my colleagues have said and what Julia has asked, I think yes, for sure, you have one. It's RWA, but it has different categories below it. You have equities, you have bonds, you have credit, you have all these type of things, and real estate, and all of them have their own marketplaces, all of them have their own regulatory frameworks, all of them have their own liquidity, their own distribution. So it wouldn't make sense just to sum them up all in one. And I think from the morning till the evening, now we've heard a lot of the same things again and again: regulation, liquidity, distribution, right? And each one of these are problems that we have to face, and each one of these are elements we have to bring in, and each element is very specific to that asset class. So yeah, they are pretty different.
So you mentioned one very important point, and I heard like everyone discussed it on different panels, is the liquidity is one of the major bottlenecks. So let me be very straightforward with the next question. Where the money is? Where the money coming to? Where is the real demand? Which sector you think is the most popular within the RWA space?
Looks like a first one here. So there are different things, but I think to your point is what problem the reward asset tokenization is solving. I'll give you an example. For instance, I'll give you even two. So the first one is for tokenization of real estate. In fact, I remember in 2018 working with, in collaboration with a Deutsche Bank, looking at that, they were tokenizing a mall in Dubai. So it's nothing new. What we see now again is also because a bit different faces, and also people get enthusiastic, and now we're really having the liquidity which become interesting. A lot of things are not necessarily new. But now it makes sense because you can do more sales and others. You have a utility. Same for tokenized money market fund. You take Benji token from Franklin Templeton. They stay a long time, no liquidity, and it started to get some volume. Why? Because they could pay a yield from the money market fund. It was not even about the tokenization. All the tech was there, everything was ready, but just to the point as well for distribution and others, there was no demand. And I think that's what will drive liquidity. And I name already like two. The other, the classic one, are usually for credit. We'll talk about it. There is some demand. And ultimately commodities. Again, I don't want to repeat a few comments.
No, it's fine. So we always look at projects in terms of numbers. So if you look actually at the real demand, you have around $30 billion in RWAs these days on chain. $15 billion it's US Treasuries. So this is mostly bought by DAOs who couldn't before allocate somewhere else, and they needed managed treasuries in a safe way because like crypto is risky enough, right? So we just want to have exposure to US Treasuries. Then around $5 billion are commodities. This is mostly gold. So there is definitely demand for that. Another $6 billion is different forms of credit, private credit, unsecured credit. So different types of credits. And then the rest you have I think around $1 billion in stocks. You have some bit of private credit, private equity as well, VC. So you can basically tokenize everything. But we have seen that the biggest demand is for US Treasuries so far. I think it also saw the biggest growth year to date. I think it went from $10 billion to $15 billion. So I would say that on chain we start kind of from the basics, from the beginning, from risk-free rate, and now we are moving more into the more risky credit. We also saw a lot of trading activity, especially over the weekend, for stocks on hyperliquid. So I think this is also getting good traction. So you kind of see it expanding basically from very low risk profile of investment into more risky one. So I think that's the trend you're seeing right now.
Yeah, I think you asked where's the money. I think most of the money is still in the pocket of the people when it comes towards RWA. I don't think people have branched out as much as they have in other asset classes. I'm just going to speak about this region, so we have more use case. It gets too broad otherwise. I think over here it's people are very comfortable with real estate in general. Dubai has always been very focused on real estate. It's been a very strong market to move the economy. And I think one way or the other, everybody wants exposure into it. So I think in this part, like anything to do with the real estate is going to have much more credibility and much more movement. But like I said, I mean, we have all the pieces together. It's just about them flowing in the right direction. And also it's about endorsement, to be very honest with you. Like, I think there's still a lot of endorsement which needs to come from the top, especially in this part of the world. And I think once you have that endorsement and once you see that there are people on very high levels speaking about it, promoting it, and actually like utilizing it in one way or the other, you're going to see a big shift over here. Like as an example, you see any prominent members from the royal family here when they visit a certain restaurant or when they go into a certain place, like within the next few weeks afterward, that place is booming. And over here, it is like that. The trend, it's very trend-based, and they really trust their leaders, and they really trust the people in power. And when the people in power sort of make a decision that this is important or this is not important, people start to look at it. And I feel that over here, it's not had its time yet, but when it does, it's going to kick off over here very strongly, more than anywhere else, for sure. Which is why I think we all are here and doing our bit to be part of this industry.
Interesting, thanks for sharing. So, anyways, we all discuss RWAs from the liquid market perspective, right? But what I found out, like a lot of founders, of course, like if you launch your RWA project, you are like in the startup mode first, and everyone is struggling with the pre-liquid market. Like, of course, like for me, even as an investor, it makes more sense to invest in the asset that you provide than invest in the technology that you are building, like overall, right? Like, because it's all about the risk management. Like, we never know, and I don't think that we have that many successful cases where we see the exit from investor perspective from the project, like early stage, who are building RWA. So, what would be your advice for those founders? Like, what they should improve in order to attract more attention from the VC side or from anyone who is involved in pre-liquid market?
Okay. Look, RockawayX runs a VC fund as well as provides liquidity. So maybe from that perspective, I can comment on it. The thing is, what we see with the teams is that you have a Web3 founders who starts to do RWAs. I would much more like to see the other way around. Somebody who can actually underwrite risk coming from TradFi and say, you know, I want to really leverage what blockchains offer, which is, you know, distribution, composability, transparency. I'm not that much into decentralization. You know, somebody has different opinion, but I think it usually makes things worse than better. But if you only offer these three things, you know, as I mentioned, then I think blockchain already gives you a lot of advantages. So if you know you have a TradFi project which is really great and which is scalable and scalable on chain, to have really something scalable, you need to have, and I will talk about credit because that's kind of like what I do, is you need to have yield which is around 10%, so you can actually tokenize it and use it, for example, in lending protocols, which, you know, for example, for loopers who can increase the yield by looping, then you start the whole flywheel when you deposit, basically the lending protocol depositors, they effectively take senior tranche, you know, so you can start to play around, you can compose the token into various different projects, and this is where you scale. We have seen it firsthand. We basically incubated a project which is called ONRI, which stands for On-Chain Reinsurance, and we were able to, you know, get them from basically zero to $150 million within a year, and that's only possible in TradFi. In crypto. So they even told me, like, you know, if you start basically reinsurance business in traditional finance, it works usually the way that you have a big company like Allianz, and they came and gave you $500 million to manage. No insurance or reinsurance company ever started basically from scratch, and I think this is what blockchain can offer you. You know, like really bringing innovation, not only, you know, taking U.S. treasuries, tokenize them and put them on chain. Okay, nice. You know, but like really change the industry into which you are and leveraging blockchain for X. So I would say coming from TradFi, finding a partner for a blockchain expansion who can help you, I think it's much better than coming from crypto where you have no idea about counterparty risk, underwriting risk in traditional finance. You know, you need to make sure that you have proper legal contracts, not smart contract. So it's kind of different discipline. But if you make it right, then I think scaling on blockchain, you can get $1 billion within a couple of years. Like in TradFi, it's impossible.
No, I completely second with what you say. It needs to be a hybrid model, but the first source point should come from TradFi, because they've done it already. They already have the best practices. They already have something that's worked. So if you take that and you just put a blockchain mechanism on top of it, you take advantage of whatever Web3 has to offer, then you can scale much more quickly. But it's also, founders are very like, everybody is trying to solve for everyone, and then you end up solving for nobody, right? So you have to be very focused, like what are you solving and who are you solving for? Like, are you solving for the institutions? But then why are you creating something that's so retail focused? Because institutions don't look at what retail look at, right? And so if you're creating completely for retail, well, then you need to make sure that your UI and your front end design backs that, and it's not so focused on the way institutions look at it. So I think there's a lot of like, what am I, is it institution, is it retail? And people are just getting lost in that. But the fact of the matter is that business is business. And that's regardless which industry you come from. How are you making money? Where is the money coming from? How are you going to distribute the money? How are you going to get revenue? How are you going to save costs? How are you going to solve a problem? Whether it's Web 2, Web 3, Web 4, DeFi, retail, any industry, like business economics and principles don't change. And I think that the problem is that people are trying to get too fancy. They're trying to like get way too over creative and like create something and push something to the market that the market is not looking for. It doesn't need that. Like he said, like decentralization, I don't really think anyone cares, of decentralization. Everyone just cares about, is it efficient? Can I get access? Do I have control? And if you have those things and you call that decentralization, sure, it's cool. But even if you don't call it that, but you give people that priority, that they can have more control with the way they use their money or more control the way they use their assets, that's what people are looking for,
And to add to this, I think it depends first if you look at it in terms of more being a service provider, then in that case you're more transversal, so you're asset agnostic because you provide the tools, the pick and shovel for the other people, so could scale better, and at least you're not sensitive or your exposure is limited to one specific sector. The opposite way around, then you should focus on your niche market before scaling. And it's not necessarily what we mentioned so far. It could be, luxury watches, art, could be Islamic finance, something that has not been really addressed and has also a lot of potential to be tokenized. And from that, we know the tech is not an issue anymore. That's why often, like in those conversations, I don't know if you noticed, but we move from using blockchain here and there to more like digital assets. So we're becoming more business-oriented than the tech, because the tech, we know we can do it. And same with the regulation, especially like in UAE, good place to develop. We can also address those concerns. So now we're down to the point, and the recommendation is nail your go-to-market, your distribution. If you do like B2B, got like key partners, because that's what as an investor we look at. We say, okay, do you have a unique value proposition, unique selling point? Who are you working with? Who can I guarantee like the critical mass? And then after you have a flying wheel, and hopefully like you will be a unicorn. So that's what I would say.
So a lot of people are talking about like trillions of dollars that could be unlocked with the help of tokenization, right? But we see that like so far like RWA is not scalable. Like even we don't have that much attention from the traditional market side to tokenization itself. So eventually, in your opinion, what still needs to be fixed in order to make RWAs scalable?
People just need to get comfortable. It doesn't build trust. When you look at anything in the RWA space, it's very intimidating. When you look at it first, it's like, how much right do I have? Like, okay, I'm owning a token, right? But what enforceability does this token allow me to have if things go wrong? Like, we're always focusing on-chain, but what if there's an off-chain problem? What if the property burns down? What if like there's a default that happens? Like what happens then? So I think that is something that's not answered yet. And I think more importantly also than anything else, is just that you need to give people an experience that they've been used to. And now we live in a time where like people are very comfortable and people are very stubborn now. They only want to do things the way they want to do them. It's very difficult to make people change now, right? And so you are going about enforcing a new type of behavior in people, which requires them to like which you're putting them in a position in which requires them to take more risk, and which requires them to do things which historically they haven't done when it comes to interacting with RWAs. You need to simplify that process for them. And then again, like I said, it will only change when it comes from the top. There has to be heavy endorsement that comes from existing markets, huge players that are already moving economies, have control over people's behaviors, people's perceptions, and then they need to go and start speaking about it, incorporate it in their value proposition in some way. And once you have a few really famous people in the world that everybody looks at speaking about RWAs and doing it in some way, people will get on it automatically, right? So I think it's just an endorsement problem, and it's also something in which you need to make people feel safe, because no one's comfortable putting all this life savings in a DeFi protocol. It won't happen,
I think ultimately it's just a problem, again, if you problem-centric, customer-centric, is what the tech will fix for you, but you don't even need to tell it to your customers. When we are discussing, for instance, a stablecoin, or you tokenize the cash, fiat currency in that case, we know some actors are using already stablecoin to do cross-border payment. They not really advertise it to the end users. It's just it's a way for them to cost-cutting and offer a better service, better price for the users. So I think ultimately, if people are, the doers, so either the entrepreneurs or even the corporates that are willing to do, if they see and they really understand the need in using the tokenization as a way. And I think there is also a side effect, because you make it easier also for the company, for their treasury, for using the asset to collateralize them. So there is things that it works for both the company as well as the end users. And if they understand what they can bring on the table for themselves and for the end customers, I think that will scale and you will reach the $1 trillion of assets.
I agree, yeah.
Oh, yeah, that was a great answer. So maybe I'll just add, I think, we are talking about on-chain finance effectively, which is super boring. I don't understand why finance should be exciting and why it should bring retail. That's complete nonsense. I believe that we need to bring institutions, and institutions are ultimately slow. Right? So it will take time. I think it will take time. That's normal. It's we are all the time thinking in the crypto thoughts that in 5 years everything has to be done. But the system on which everything is built right now was built for 100 years. Yeah. So it will take time. It will happen. It will take time. And I think end users, they shouldn't even know they're using blockchain. I completely agree with that. And to bring institutional investors, I think companies, I think they see the efficiency. They're starting looking at it. I think what we need to significantly improve for RWAs, what can really bring a lot of traction, is secondary liquidity, because a lot of RWAs, they don't have secondary liquidity in TradFi, but blockchain is 24/7, right? So there is a gap between what's happening on chain and basically what's happening in traditional finance. If you are able to close this gap, then I believe that for institutional investors, it will be very interesting, because like you mentioned that you have very good liquidity for bonds, which you don't have even in TradFi, right? If you look at your Bloomberg terminal, you see maybe 2-3 transactions. On blockchain, you will see all of them, right? So it will not be really, institutionals to institutionals, but because you have basically the ledger, you will see all the transactions. I don't think it's that relevant for stocks, because you have volumes there. So there'll be definitely assets for which, if you improve liquidity, real estate, private credit, then I think that's one of the value proposition which can basically bring institutional investors in. You are institutional. So.
Yeah. I'm thinking about something else. It's also about going into native issuance, because as we tokenize reward asset, sometimes it's a gas factor. Yeah? If you want to do, a tokenization of a fund, you may potentially issue an ETF and tokenize the ETF. You want to do action, the stock equity for a corporate, you will do SPV, tokenize the SPV. Well, there's all those friction at the end of the day. You don't have that many gains. But when we do issuance native, so that will also help, I think, in terms of adoption and really reaping the benefits of blockchain.
Precisely. So what I believe for institutional investors is important is to have a clear understanding of what's the benefit for them of participating in RWA space and tokenization space, right? So, and I want to ask you a few personal questions, starting from Adam. So you mentioned that, again, you are a quite professional in DeFi, so you understand how the whole industry works. And now we have a new, like you can tell it, like they call it buzzword, RWAFi. So how you can see the shift in the market? Like, can RWAFi replace DeFi or add more value, or do you see like a demand from the retail perspective in RWAFi itself?
What is RWAFi?
Yeah, I also don't know.
So see, it's a buzzword.
Yeah, I don't know what's that. You mean RWAs or what is the phi at the end?
So it's basically the new buzzword on the narrative, like then you use RWAs as a collateral in order to generate some yield.
Yeah, so you can compose RWAs. I mean, that's the phi, and I think that's definitely a way to scale, right? So if you really want to scale on chain and you want to have good distribution, the good thing is that you can have one underlying asset, let's call it, I don't know, reinsurance yield, which gives you 12%. What you can do actually, you can put it in Camino as a collateral, you can borrow against that, and so you can de-risk because you're borrowing against that, so you don't have that big position. Or you can basically borrow and loop it, so again, put it basically in the same projects, and then you can enhance your yield. Then you effectively are taking junior tranche in a sense, right? So you can have one asset, and the other platforms, they're enablers for you basically to play with the yield. And that's why I think it's a bit more for sophisticated investors. We, as RockawayX, we, for example, have RWA Vault on Camino, which is basically allocating into markets in different RWAs based on the collateral they offer. So we need to run our own due diligence. We have to have opinion about the underlying. We usually have also agreement with the companies, which we are providing liquidity this way. So there is also like legal aspect involved. We just don't provide liquidity and that's it. And we are really trying to be partners for the RWAs. So integrating them into the lending protocols, but we also, for example, create secondary liquidity for them. So we provide, for example, liquidity into AMM, and then we market make the AMM to make sure that their price is close to NAV. And we are just keeping it in some range. We are actually working on RFQ platform, which will offer even better secondary liquidity for RWAs, because currently the AMMs are very inefficient, because if you have money in AMM, it just basically stuck there. It doesn't generate enough fees to pay for the risk the liquidity providers are taking, so the RWAs often subsidize those pools, and it's expensive for them. Or they provide the liquidity themselves, but then they cannot use them for basically the RWA, right? So they need to put aside some liquidity. So that's what I meant when I said that if you solve the secondary liquidity, especially with the RFQ, where we as a RockawayX, we put our own money because we know the counterparties we are providing liquidity to, then I think this is the enabler which enable you to scale very quickly almost any RWA which is good quality RWA. Of course, you have many of those which are really bad quality, so you need to be really picky with who you work with.
Thank you. So, Hervé, the question for you, apparently you have the banking infrastructure to back you up, and how do you leverage that in order to plug in RWA space? Or how do you see the banks could contribute to the whole tokenization industry?
Yeah, I think the banks, and obviously Standard Chartered makes no exception, need to work around like all the different, let's say, blocks from the life cycle of those digital assets. So you need to be capable to issue your tokens. So for instance, you have a Libera as a tokenizer, but you need also to be capable to store them. So they have a custody solution, to exchange them, so their custody and so on. So you really need to have those included also like for, we didn't talk too much, but all like broker dealer, like doing like with enabling like leverage is also quite prime broker, so it's quite interesting part. And once you have all of those elements, then you're capable to control your chain end to end, and then that's where you can scale. So either you do it, as was the choice for the bank, to do it internally through majority stake investment, and then you control those different blocks, or you do it through partnership. So if you have your own startup, of course you cannot be everywhere, and I advise you not to be everywhere, but you need to have your key partners for all of those aspects if you want something that is scalable.
Thank you very much for sharing. So, CJ, the question for you, as long as you represent the local family office, so my question to you is obvious. Like, how do you see like the benefits of GCC compared to other regions in terms of tokenization?
Adoption there is fast in general, in anything. I think people respond here very quickly, and I think the leadership in GCC in general is quite innovative in its approach. They think they're not closed-minded; they're quite open-minded, and they're willing to do whatever needs to be done to be ahead of the curve. We always want to be number one here, and in many things we are number one, and that's because there is. When something is said at the top over here, and there's directions that are given, then there is no friction in the layers below that question that in any manner and say like, oh, I don't want to do it, oh, I don't agree with this. Like, everybody is in alignment, there's a lot of trust, there's a lot of loyalty, and because of that unification structure, you can execute very quickly. And when you start executing together as one, you will always achieve greatness, right? Union always takes you forward, and division to some degree always keeps you there. So I think that there's a lot of union over here. And when it comes towards this space in particular, when it comes towards blockchain, Web3, AI, there's a reason that anyone who is in this space has something to do with the Middle East, because we've positioned ourselves like that this is the hub for these type of conversations to have. And I also think that over here, you can get access relatively quickly, like you don't have to be a very well-connected person in that aspect. You just need to know some people who know some people, and you can get access to either regulators, either to the free zones. Everyone is open to having a conversation. Let's just start from there. And just simply with that mindset, because you're open to conversations and you're open to exploring what possibly could be, you will end up in a place where you create something that can be, right? And I think that for us in this region, there is no other place I would want to be for this industry, for this vertical, because I think we've not even scratched the surface yet. In the next coming 5 years, we're going to make some great products, some great solutions. There's going to be a lot of movement. And I think that the massive wave of that movement will begin here, and they'll have a global impact.
Thank you very much. And what I believe, even the fact that despite all the recent challenges, we have so many people coming to this place, willing to learn more about tokenization and sharing their experience is amazing. That shows the resilience, that shows like how much it still needs to be done here. And of course, we are here to stay. Thank you very much, everyone, for sharing your insights. It was very interesting for me to learn as well. Thank you.